Analysts are watching in silence. A flat chart suddenly throws out a bold green candle. Underneath, more than 1.36 trillion tokens blast through order books in hours. What just happened to Shiba Inu? And is this rebound real, or just another trap before deeper lows? Stay with me as we unpack this shock move, step by step, right now, from every angle, for traders, holders, and skeptics. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. Through most of November, Shiba Inu has been grinding lower inside a tired range, even while parts of the wider crypto market started to recover. Bitcoin's bounce from recent lows pulled liquidity back into risk assets, but Shiba Inu did not fully participate, leaving many holders frustrated. As a late-cycle meme asset with a gigantic supply and community, it often needs a clear, loud catalyst before it can move decisively. At the same time, some research notes have described Shiba Inu as stabilizing rather than collapsing, with price compressing near support while traders chase even higher beta meme tokens elsewhere. That stabilization narrative is important because compressed markets tend to respond violently when new information arrives. When a quiet chart suddenly receives a shock in volume, news, or on-chain flow, the next move is usually sharper than normal. That is why the 1.36 trillion token flush on 25 November stands out so much. In one widely cited analysis, a single Shiba Inu session showed around 1.36 trillion tokens in trading volume, described as an aggressive flush and absorption wave. This kind of footprint appears more often near market pivots than in random sideways periods. Historical price data from major trackers shows that the 25 November candle bounced from intraday weakness to close near a level equivalent to 834 units, up from the previous day's finish in the high 700-unit band. Other datasets reflect the same story of compression, small dips, and then a sharp rebound into that region. After weeks of sluggish action, Shiba Inu finally pushed off the floor with a volume profile that could not be ignored, even as commentary kept stressing how fragile meme coin sentiment remained. Live dashboards today show Shiba Inu trading around 819 units, with a recent 24-hour trading volume near $132 million and a market cap close to $4.8 billion. Other trackers echo similar figures, with day ranges keeping price inside a tight channel between recent local lows and the bounce high. Price summaries for the day also noted that Shiba Inu spent parts of 25 November more than 3% higher, a solid gain compared with the quiet trading earlier in the month. Inside order books, this translated into a real behavioral change. Instead of unrelenting selling into every small rally, buyers finally met the dip with conviction, stepped higher in the ladder, tightened spreads, and shifted the short-term bias from constant shorting to cautious long exposure. Technical breakdowns picked up the same theme. Recent chart analyses have highlighted how Shiba Inu's crash sequence drove its momentum indicators into oversold territory, with the relative strength index sliding into zones that previously preceded relief rallies. Oversold readings are never a guarantee of a bottom, but they often appear when selling pressure starts to tire out. At the same time, composite indicator screens still show a majority of signals leaning bearish, with only a smaller group flipping bullish so far. That split tells an important story. The broader trend has not yet turned, but pockets of strength are starting to form beneath the surface. When you combine that with the 1.36 trillion token day, you get a classic early bottom pattern where quieter smart money begins testing the waters, while much of the crowd remains fearful. From a chart perspective, traders are watching several zones closely. One is the support shelf in the mid-700 unit region, which has repeatedly caught price through November. Another is the resistance band just above 880 to 900 units, where earlier bounces have failed. Above that, long-term moving averages sit even higher. Reclaiming those would mark a real structural reset instead of just another short-lived blip inside a downtrend. Some market notes have framed the current action as a possible setup for a rebound as long as the main support floor continues to hold. That interpretation fits well with the volume flush story. When a level keeps defending over multiple tests and eventually attracts a huge rush of trading, it can signal a change from forced selling to opportunistic buying. Still, a single strong candle does not rewrite weeks of bearish structure. Broader sentiment screens remain cautious, reminding traders that Shiba Inu's bigger picture is one of defense, not aggressive risk-on behavior. Practically, that means the push toward the 834-unit region is best viewed as a tactical rally inside a larger downtrend. The key question is whether Shiba Inu can now stack higher lows above the mid-700-unit area and then challenge the 900 to 1,000-unit pocket with conviction. If that path plays out first stability, then higher lows, then a push into heavier resistance, the 1.36 trillion volume spike may later be remembered as the moment the market quietly shifted from weak hands to stronger ones. If instead, Shiba Inu quickly loses the 800 region again and slides back toward prior lows, the event will be marked down as another brief squeeze in a tired bear market, not the start of something larger. On the community side, tools that track meme coin conversations show a clear jump in Shiba Inu mentions after the spike. Traders circulated screenshots of the huge candle, joking that the token had finally woken up after a long nap. Sentiment monitors indicate that while caution still dominates, the share of optimistic posts has risen compared with just a few days earlier. Developers and ecosystem figures, meanwhile, have emphasized ongoing progress. Recent updates highlighted 3 notable milestones for November: recognition in a key regulatory list in Japan, the launch of around-the-clock futures trading for Shiba Inu on a major global venue, and early conversations around potential exchange-traded products tied to the token. These developments are not direct drivers of the 25 November bounce, but they reinforce the idea that the ecosystem remains active rather than abandoned. Earlier in the month, November coverage also underscored a pickup in token burn activity, with weekly burns rising compared with October. The absolute numbers are still tiny relative to the massive overall supply, yet they matter symbolically for the community's long-term narrative about scarcity. Put together burns, infrastructure work, and a sudden surge in trading interest, they help rebuild a sense of momentum around a project that had felt stagnant for several weeks. Looking to the near term, over roughly the next week to 1 month, focus is fixed on a simple ladder of levels. Shiba Inu first needs to hold closes above the 800-unit area. Losing that quickly would damage confidence in this rebound. If that base remains intact, the next target range is between 900 and 1,000 units. A clean break and consolidation above that band would show that buyers are willing to absorb profit-taking from traders who bought the initial bounce. Some November outlooks suggest Shiba Inu could still deliver a mid-teens % gain by the end of the month if broader conditions cooperate, with potential to climb into a higher band supported by steady Bitcoin and stable risk appetite. Translated into units, a move like that from current levels would put Shiba Inu in contention for the 1,100 to 1,200 unit zone. Further out, across the next 3 months to 3 years, the scenario naturally becomes more speculative. If Shiba Inu can use this rebound to anchor a durable base, maintain modest burn activity, create more real usage inside its ecosystem, and ride any wider altcoin cycle, revisiting higher bands such as 1,500 units during strong risk-on phases is not impossible. If, by contrast, attention continues to rotate into newer meme tokens and the project fails to deliver compelling updates, price could simply wander sideways or gradually drift lower within a wide, frustrating range. A balanced view demands that both sides of the coin are respected. On the positive side, Shiba Inu has just logged one of its largest volume days in months, defended an important support region, and pulled fresh attention from traders and commentators. These are exactly the signals you would expect to see near a potential turning point, especially when combined with ecosystem milestones and burn progress. On the risk side, the leading technical picture is still cautious. Trend tools lean bearish, long-term moving averages remain overhead, and many sentiment gauges still see more downside risk than guaranteed upside. A fresh wave of risk-off selling in crypto or heavy distribution by large holders into this strength could easily send Shiba Inu back toward the 700-unit area or below. For now, The most neutral stance is to treat this bounce as a promising signal that needs confirmation, instead of assuming it automatically marks the beginning of a new explosive trend. The flush has hit, the candles have spoken, and Shiba Inu has answered with a fragile rebound from the lows. From volume shock to cautious optimism, every signal we covered today is just a chapter, not the whole story. Guard your risk, track the levels, and never chase blindly. Because when Shiba Inu finally chooses a direction, it rarely moves politely or slowly. So stay alert, informed, and emotionally prepared. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.